following is an update and technical analysis on natural gas futures based upon the 240-minute interval, in which I will additionally zoom out on the much larger picture within the monthly time frame. And 7 days ago, I had mentioned here in the community post down below that natural gas was testing big monthly interval price support level of 1611, as discussed in my previous technical analysis of natural gas futures, offering in an aggressive long trade setup on the commodity. And here's the update. And with the entirety of that trade scaling in process off the 1611 monthly interval price support level, bid to the button all the way to the top of the 179 price resistance, call it the 786 fibs retracement, and the entirety of that move was good for 11.22% in gains. And in light of the recent crash in U.S. natural gas futures, I believe a 50% crash within a month, reaching lows reminiscent of the early COVID crash time zone at around $1.60 per million British thermal units. A Chesapeake Energy, a prominent shale producer, revealed in its Tuesday earnings report that a strategic decision to curtail drilling operations in order to scale down production. The announcement triggered a surge in natural gas futures, with a decline in natural gas prices over the past year can be attributed to several factors, including an unusual warm winter attributed to El Nino, resulting in decreased demand for heating fuel, as well as increased production by shale drillers, leading to an abundance of stockpiles surpassing typical levels for this time of the year. And that was the biggest catalyst. Talk about, once again, the charts remanufacturing the headlines based on the 1611 price support level. We additionally, here off the 240-minute interval, put in a very big divergent low off this rising wedge pattern. We had a inverted parabolic downtrend line with major reactionary highs really across that entire sphere here. We broke out of it. We backtested it really to the button there. Upon reflecting the 1611 price resistance, completely gapped down, took out and rated some stops down below, which wasn't even geared for a 5% stop loss, where the entirety of that drop was good for 4.6%. And the entirety of that move right to the upside, reflecting, backtested it, finally recovered it off the Chesapeake earnings report news. And the entirety of that move was a double-digit move, retesting the 786 fibs retracement, where you could additionally pile in on it, which would call a very aggressive short trade setup to the downside, where you had three major reactionary 240-minute highs off the 786 fibs retracement, and that could usher in a potential revisit of this primary reactionary uptrend line in the 1611 price support, which would be good for a 10% crash, double-digit move to the downside. Ultimately, long traders and or bull traders of the natural gas commodity futures want to see a solid infused 240-minute breakout up above the 786 fibs retracement to go on to re-challenge the 618 fibs, call it the 194 price resistance, and then ultimately take that level out to re-challenge the 50% fibs retracement at 259 price resistance. And that is a big 240-minute major reactionary low and high key pivot point to go hone in on and watch to be respected amongst short sellers and or long traders of the commodity there. Zooming you out to the monthly time frame based upon which would call the biggest major reaction off the 1611 price support level, and that was bid heavily there. I've added a new 1527 price support level with additional major reactionary lows really across the entire sphere there, and reactionary highs dating back since the mid-90s there. And that will be a heavily respected level amongst long traders and or bull traders, short sellers of the commodity, to hone in on, where they want to see an additional, maybe a potential retest off the 194 price resistance and a rejection back down to retest, which would call the neckline to the ultimate head and shoulder classic looking top. And that would be the ultimate biggest monthly candle close breakdown if short sellers could ultimately take that key inflection point out, and was bid heavily right off that needle. And here we are honing in on what I would recall a 786 fibs retracement potential rejection. And then we could ultimately go on to retest the 194 price resistance, which would ultimately need to be defended by short sellers and or bear traders of the futures commodity price.